Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. We're going to talk to you today, see if I should be doubling down on this one tech stock that I own, this tech giant that is up 78% in the last 5 years. Question is, should I be adding even more?
Smash that subscribe button, guys. Give us a thumbs up. Is Bert about to go deeper into a certain stock that is up almost 80% in the last 5 years? A little bit of a, of a pullback possibly with a little court ruling that's going on right now for this company. So Bert, I'm very excited to see what's on your mind with this stock that you own over $6,000 of.
That's right. So this company that we're going to talk about today is Qualcomm, ticker symbol QCOM. A couple of years ago, I started loading up on Qualcomm. I was buying them up until the end of 2023, beginning of 2024. It's been quite the journey for Qualcomm here this year before we close it out.
Yeah.
If you zoom out and you take their year-to-date stock price, I'm going to put this chart up here. They entered the year at $140. They got as high, Lanny,
200.
There's $230 back in June, and now they're back down to $158.53. So you get to the top, now it's coming back down the mountain, and I'm back asking myself, should I be adding more?
The peaks and valleys, guys, of Qualcomm stock. Well, we all know what's going on with Intel, INTC, and the semiconductor space. Not a good year, not a good time of owning Intel stock. We should know. Now, Qualcomm's one of the better competitors to Intel. In fact, they're still up 13%, Bert, despite having to swing up and swing back down. Again, down 20% in the last 6 months. The back part of this year, they've definitely taken a nosedive because there's a little bit of a battle going on and relating to ARMS, another big player in the space, chip architecture structure.
Yeah, and if you look at their 5-day chart, they were down at 150 and they popped up. That's because there was some major news for a lawsuit and a battle that's been going on between Qualcomm and ARM. There was a startup called Nuvia that was acquired. Qualcomm and ARM got into this battle of, does Qualcomm have to renegotiate its deal?
Main battle.
Yeah, can they use ARM's chips? Can they benefit from this in their PC space? Well, ARM obviously said, no, we want you to renegotiate. We want to get a better term, better deal for us. Qualcomm said, not so fast. That's not what the paper says. Look here. Here's the contract. We'll let the court settle this. The court ruling is cleared the way. I'm going to put the image up here for Qualcomm to continue selling chips used in personal computers, including Microsoft Surface laptops. And Lanny, why is this so big for Qualcomm? What is this going to help them achieve?
Financial freedom. No. No, I mean, it allows them to get into different spaces. They're a big smartphone chip provider. I mean, just look at what chip your non-Apple phone is. You're chugging a bottle of wine over there? Oh my gosh. Sorry. Yeah, the bottom looks like a bottle.
Yeah, just the bottle. Yeah, I get that. I can see that. Yeah, it's got the same shape.
Like, damn, dude. I was like, it's 10:30 here, but why not?
Yes.
No, it allows them to get into different spaces, as Bert just said. Surface laptops, other PCs, the non-smartphone space, essentially. When you think about laptops, PCs, and other tablet type devices.
Yeah, that's huge news for Qualcomm. And that's what sent the stock price up nearly $10 per share since that was announced. However, because they are only up 13%, because they are down from the low, we wanted to take the bigger look. To quickly recap their earnings, which were announced in November. Obviously, a lot's happened since the beginning of November, since earnings were announced. But they announced a $15 billion share buyback program. Earnings per share was up 19% year over year. Revenue was up 18% year over year. And they raised their guidance. Their guidance for Q1 was 285 to 305 for earnings per share. And revenue is supposed to be between 10.5 to 11.5 billion. So great.
Huge. Yeah. We're talking, in one quarter, right, Bert? You're talking 11 billion in revenue.
That's right. So positive news, positive vibes from the earnings release, positive news, positive vibes from the legal front for Qualcomm. They're able to expand into that PC space. Well, we're going to run them through our stock screener now and see, are they stock to buy? Should I be adding? Should I be doubling down on my Qualcomm position? Lanny, what are the metrics in our stock screener?
Guys, we're going to look at that price to earnings ratio less than the S&P 500. Again, seeing if they're undervalued versus the overall stock market, because you're trying to find stocks that are, not to use the word cheaper, but undervalued in comparison to what the big 500 are doing. We look at the payout ratio because we're passive income investors. You want your passive income not only to stay at least where it's at, aka the safety of that passive income stream, but does the company have the ability to continue to grow that income stream? That's what the payout ratio tells you guys. Again, the dividend, growth here. Again, we're income investors. You want that trajectory of growing income faster than inflation. We'll look at the dividend yield. We'll compare it to the 5-year yield average to see if there's any little bit of extra margin that you're getting comparative to where they usually trade at. But Bert, this is Qualcomm. I mean, again, like we said, they're up 13% year to date, down 20% last 6 months. Have had a huge run up over the last 5 years, almost doubling in stock price. They're trading at $158.53, Bert.
Yeah, so forward earnings per share forecasts are $11.18 per Seeking Alpha. Gives you a PE ratio of 14x. So much cheaper than the S&P 500, cheaper than a lot of the other tech stocks out there, but slightly higher PE ratio than the likes of Intel. Well, no, it's actually probably not cheaper than Intel. So it's just overall, it's cheap. I was thinking Intel is cheaper, but they don't have earnings, so that's going to make it very expensive on the PE.
Hard to have a PE ratio when you don't have, one part of the equation.
Yes, and their payout ratio, their annual dividend is $3.40. That gives you a payout ratio of 30%, which is very good in this sector. You want them to be able to reinvest those earnings into the business and development.
Yeah, you don't want that too high, and 30%, even if earnings was cut in half, is still at 60%, or even. No, we're not going to keep going on that path. I feel like I'm talking about Intel again, but they've had 21 years of growing dividends as well. That is rock solid. They are so close, guys. They should get there, obviously, within now the decade here to get to an aristocrat 25 plus year stats. Yeah, give that a hand clap. That slow clap. But average dividend growth rate is a little over 6%. Historically, that does beat quote unquote inflation. So you have to like that. Now, Bert, does a dividend growth of over 6% on this growth-esque stock pair well with that dividend yield currently?
Their current yield is 2.14%, which is in line with its 5-year average of 2.19%.
Right in line, right in
So
line.
it's actually interesting that they are so close together like that. Overall, you'd probably expect a little bit higher of a dividend combination between the 2.14% yield and 6.2% 5-year growth. You'd like to see 10%, especially in the tech sector, especially in a lower yield. You'd want to see 10 plus. It's always interesting. That's always been the one hang up with Qualcomm that we've seen from people when they've watched our videos, when they've responded to our tweets out there, that they just want that dividend growth to be higher.
But at the end of the day, this is Qualcomm. Is it better than owning the S&P 500? It's got better yield, a very similar dividend growth rate, performs relatively the same on a appreciation standpoint. Bert, what's the recent 5-year return on the S&P 500?
All right. Well, Qualcomm we said was 78% for that 5-year return. The S&P 500 is 86%. So it's trailing the S&P 500 a little.
Trailing the S&P 500, not by a ton when you actually think about it. So you're getting more
when
yield.
You compare it to Intel. It's absolutely crushing it.
Well, do you want to sell your Intel remaining and buy Qualcomm?
Yeah, that's, I think, the question. That's why we're here. We currently own 39 shares, so about 6,200. Is this a stock we want to get to 50 shares in our portfolio? Do we want to at least get $10,000 in the short term for Qualcomm?
That's a big position.
It's a big position. It'd be one of the larger individual stocks. I'm liking it. I'd love to see it below 150. I'd love to see it below 140 again. At least 140, below 150 before I start adding and nibbling shares. Below 140 before I start really starting to add more, like 2 or 3 at a time. That's kind of where I'm drawing the line here for it.
There it is. Yeah, can't argue with that. Great company, great performing stock, obviously, juicing up revenue, showing earnings, growing earnings, projecting earnings higher. There's a lot of good positive waves going on with Qualcomm stock, guys. So the question is would you buy Qualcomm stock? Would you also sell your Intel stock if you have any to buy Qualcomm stock? Should Bert get to 50 shares or $10,000 worth of Qualcomm? Let us know in those comments, guys, below.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, you're either with us or you're against us, Jack.
That was Bert the Hurt Man and Lanny from the Dividend Diplomats, over and out.